Disruption confirmed, that's me, relax, no scams, no scams, just my brand new show, News Caustic with Cyrus.
This is where it happened. It's where they went from world class
Oh, cover, what a save!
to legendary.
One of the great classic of goals.
Legends were born right here. Watch it happen again.
Harry Kane! Oh my goodness!
Der Klassiker, Bayern versus Dortmund.
This is India's #1 news network, and you're watching News9, English news as it should be.
A very good morning. You're watching News9. I'm Karthik Malhotra. This is Morning Brief at 9. First up, let's take a quick look at the headlines. Gold bullion prices rise as much as 1.2% to $4,379 an ounce on Friday, reaching a $30 trillion market capitalization. This put it on track to record its highest weekly gain since 2008, while extending a breakneck rally that began in August. India rejects UK sanctions on Vadinar refinery, calls for end to double standards in global energy trade. Delhi's air quality worsens, slips deeper into poor category, with forecasts warning of very poor levels ahead of Diwali amid stubble burning and calm winds. The Directorate General of Civil Aviation releases draft norms for cabin crews, setting flight duty limits, landing caps and mandatory rest period to enhance aviation safety. Infosys and Wipro quarterly earnings show subdued growth for Wipro but a decline year on year for Wipro. US demand slowdown, shares dip on Wall Street. US President Donald Trump to hold talks with Russian President Vladimir Putin in the coming weeks in Budapest, after yet another very productive call on ending the Ukraine war. President Donald Trump questions sending Tomahawk missiles to Ukraine ahead of his meeting with President Volodymyr Zelensky, citing US stockpile concerns. China accuses United States of distorting facts after Treasury Secretary Scott Bessent's remarks on Chinese trade policy amid rare earth export controls. Canadian Prime Minister Mark Carney plans talks with senior Chinese leaders, signaling a fresh chapter in Canada-China relations after years of strain. Just hours after US President Donald Trump claimed that Prime Minister Narendra Modi assured him India would stop purchasing Russian oil, the Ministry of External Affairs clarified that no such conversation took place. MEA spokesperson Ranveer Jaiswal confirmed during his weekly briefing on Thursday, saying, and I quote, "As per my information, there was no telephonic conversation between Prime Minister Modi and US President Trump," unquote. He added that the last phone call between the two leaders took place on October 9th. Now, the ministry emphasized that India's energy sourcing policy remains consistent, prioritizing the interests of Indian consumers amid a volatile global energy market. Now, Trump had earlier stated on Wednesday that Prime Minister Modi had assured him India would stop buying Russian oil, calling it a big step, and adding that the next focus would be on China. The MEA clarification yesterday makes clear that no such assurance was given in the latest period.
अमेरिका से जो टिप्पणी आया ऊर्जा को लेके, उस पर हम लोगों ने अपनी एक प्रेस विज्ञप्ति, एक स्टेटमेंट जारी किया है। तो मैं आपसे कहूँगा कि जो हम लोगों ने स्टेटमेंट आज सवेरे आप लोगों के सामने रखा है उस पर आप नज़र डालिए। जहाँ तक टेलीफोन की बात है तो उसमें मैं ये कह सकता हूँ कि मेरी जानकारी के हिसाब से प्रधानमंत्री और राष्ट्रपति ट्रंप के बीच में कोई बातचीत नहीं हुई कल।
All right, and shifting focus now to gold. Gold prices are on a boil and again touched a record high as investors ran for a safe haven amid fears about credit quality in the US economy, as well as rising friction between Washington and Beijing on trade issues. The gold bullion prices rose as much as 1.2% to $4,380 an ounce on Friday, reaching a $30 trillion market capitalization. Now, this put it on track to record its highest weekly gain since 2008, while extending a breakneck rally that began in the month of August. The buying spree of gold among investors can also be related to numerous reasons that the Federal Reserve could deploy on outsized rate cut this year. It's not just gold. Silver too smashed an all-time high this week on a now defunct contract overseen by the Chicago Board of Trade. Now, prices for the white metal edged higher to hit a fresh peak at $54,375 an ounce on Friday before pairing gains. Now, palladium and platinum were also on track for hefty weekly advances. Now, UK has firmly reiterated its stance on Thursday that it does not support any unilateral sanctions. Now, that statement came after the United Kingdom imposed sanctions on Vadinar oil refinery in Gujarat, operated by supplies are sourced by Indian companies from across the world, taking overall market conditions into account, and stressed that no double standards should be applied in energy trade. Now, this comes after Naira Energy had earlier been hit by European Union sanctions, a move the company had strongly criticized.
The latest sanctions announced by the UK, as I have said this earlier as well, and possibly most of you are aware of it as well, that we do not subsidize companies source energy supplies from around the world while taking overall market conditions into account. We would stress that there should be no double standards, especially when it comes to energy trade.
And from oil, let's move to pollution. Delhi's air quality continues to decline, slipping deeper into the poor category, with forecasts now warning of a shift to very poor before Diwali. The worsening conditions come amid rising stubble burning and calm winds. Dwarka Sector 8 and Anand Vihar remain in the very poor zone, while other areas like Bhavana and Narela are in the poor category, with levels inching up. Delhi's average air quality index worsened to 234 on Thursday, down from 211 on Wednesday, firmly in the poor category. Now, forecasts suggest it may dip into the very poor zone, with stubble burning's contribution to pollution expected to increase sharply by Friday. In the NCR region, Noida recorded the worst AQI in the country on Wednesday at 318, reaching the very poor mark, the first in the region this season. Greater Noida and Gurugram also saw a sharp rise in pollution levels, while Ghaziabad showed only slight improvement but remained in the poor bracket. Now, stage 1 of the graded response action plan is now in effect across Delhi NCR, enforcing stricter pollution controls. Experts warn that worsening AQI coupled with calm winds and haze may further impact temperatures and visibility as Diwali approaches. The Directorate General of Civil Aviation, or DGCA, has released draft duty and rest period norms for cabin crew, aiming to enhance aviation safety and regulate work hours. Now, under the proposed rules, flight duty periods and landings are capped based on total flying time. For instance, a maximum duty period of 11 hours allows up to 6 landings, while 12.30 hours permit only 3 landings. Similarly, for longer duty hours of 14 to 15 hours, the number of permitted landings drops to 2 or 1 depending on total flight time. The draft also clarifies key definitions, that is, flight time begins when the aircraft starts moving for takeoff and ends when it comes to rest, while flight duty time starts when a crew member reports for duty and ends once the aircraft stops and engines are shut down. Rest periods have been standardized as well. Cabin crew must get rest equal to the preceding duty period, with 12 to 18 hours for flights crossing 3 to 7 time zones and up to 36 hours for flights crossing more than 7 time zones. The DGCA also proposes that maximum duty in any 24-hour period should not exceed the allowed flight duty period by more than 1 hour. Tech bellwethers Infosys and Wipro released their quarterly earnings yesterday. The September quarter performance reflects a subdued demand for IT services given the tariff uncertainties with the US administration and low discretionary spending by corporate America. Now, Infosys' revenue grew 2.2% quarter-on-quarter, that's sequentially, and as much as almost 3% year-on-year in constant currency terms. But Wipro, on the other hand, its revenue increased just 0.3% sequentially and declined 2.6% year-on-year. In dollar terms, Infosys posted revenues of $5 billion, marking a 3.7% year-on-year growth. Wipro's revenue stood at $2.6 billion, registering a 2.1% decline in dollar terms year-on-year. Now, Wall Street wasn't impressed with the performance, and Infosys and Wipro shares fell as much as 3% and 2% respectively in early trade on the New York Stock Exchange. In early signs of the Indian stock market opening, Infosys and Wipro are down more than 1% in the pre-opening data coming in on the screens right now. Time for a very short break, but a lot more coming up on the other side. We'll bring you all the global stories that must be on your watch list this morning. You're watching Morning Brief at 9.
In association with Can't Do Without Servo 40 Extra from Indian Oil.
नई गाड़ी देनी पड़ेगी
हमें भी
शोरूम खोलो जल्दी।
अंतर महंगा इंश्योरेंस बेचने की पूरी कोशिश हो सकती है जबरदस्ती।
कौन करेगा जबरदस्ती? खोड़ दूंगा इधर मैं।
टैक्स कम लाकर नई गाड़ी के लिए हम एको कार इंश्योरेंस ही लेंगे।
फेयर प्राइस, कम प्रीमियम।
बात खत्म।
अरे सर बात खत्म।
कार का एक्शन हीरो एको।
You can take a left, you can take a right. Animals also or a little time. If you really feel it, say it out thrice. It's the vibe, it's the vibe, it's the vibe now.
Welcome back. You're watching Morning Brief at 9. Time to move on to all the global stories that we're following for you this Friday morning. US President Donald Trump announced that he will meet Russian President Vladimir Putin in Budapest, Hungary within the next few weeks after what he calls a very productive phone call on Thursday. The conversation focused on exploring ways to end the ongoing war between Russia and Ukraine, which Trump described as an inglorious conflict. Now, Trump's meeting with Putin comes partly after frustration with the ongoing conflict, despite his earlier hopes to end it within 24 hours of his becoming president.
Call with President Putin today, and you spoke about meeting in Hungary with him. Do you have a timeline or a date set for when?
I would say within 2 weeks or so, pretty quick. Marco Rubio is going to be meeting with his counterpart, as you know, Lavrov, and they'll be meeting pretty soon. They're going to set up a time and a place very shortly. Maybe it's already set up. They've already spoken. And I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. Tomorrow I'm meeting with President Zelensky, and I'll be telling him about the call.
President Donald Trump has raised fresh doubts over the idea of supplying Tomahawk missiles to Ukraine just a day before his scheduled meeting with President Volodymyr Zelensky. Now, Trump told reporters that while the U.S. continues to support Kyiv, it cannot afford to deplete its own weapons stockpile. He also confirmed discussing the issue of Tomahawks with Russian President Vladimir Putin, who in his words, did not like the idea.
Well, we talked about it a little bit, didn't say much, but I do say to you, we need tomahawks for the United States of America, too. We have a lot of them, but we need them. I mean, we can't deplete for our country. So, they're very vital. They're very powerful. They're very accurate. They're very good, but we need them, too.
But did President Putin try to dissuade you from selling Tomahawk missiles?
Well, of course. What do you think he's going to say? Please sell Tomahawks?
No, but did he give you
Is he going to say, please sell those Tomahawks? I really appreciate it. I did actually say, would you mind if I gave a couple of thousand Tomahawks to your opposition? I did say that to him. I said it just that way. He didn't like the idea. He really didn't like the idea.
Now, China has hit back at the United States, accusing Washington of stoking panic over its rare earth export controls. Beijing said U.S. Treasury Secretary Scott Bessent's remarks about a top Chinese trade negotiator were grossly distorted and rejected a White House call to roll back those restrictions. Now, the response adds to the latest flashpoint in the U.S.-China trade rivalry. Take a look at this report.
China on Thursday accused the U.S. of stoking panic over its rare earth controls and rejected a White House call to roll back the measures set to take effect next month. China produces over 90% of the world's processed rare earths and rare earth magnets. They are vital materials in products ranging from electric vehicles to aircraft engines and military radars. On Thursday, China's Commerce Ministry spokesperson said the U.S. was misrepresenting its policies.
The U.S. interpretations have grossly distorted and exaggerated China's measures and deliberately provoked unnecessary misunderstanding and panic.
The comments come as U.S. President Donald Trump prepares to meet Chinese President Xi Jinping in South Korea later this month to try to hash out a trade deal. Trump was asked about the state of the relationship on Wednesday.
You're meeting with President Xi in a few weeks.
Yeah.
If you can't come to an agreement or a deal at that meeting, are we in for a sustained trade war with China?
Well, you're in one now. Look, we have 100% tariff. If we didn't have tariffs, we would be exposed as being a nothing. We would have no defense. They've used tariffs on us, but we've never had anybody sitting in that chair that felt the need to do it.
China's expanded rare earths export controls left trade negotiators and analysts the world over wondering whether it intends to require manufacturers of any product anywhere in the world containing even trace amounts of Chinese rare earths to apply for a license to ship it to its final destination. China's Commerce Ministry told reporters that was not the case. U.S. Trade Representative Jameson Greer on Wednesday called China's new measures a global supply chain power grab and said that he expected Beijing not to implement them. Treasury Secretary Scott Bessent suggested there could be another possible extension to the current 90-day tariff truce, which is set to expire around November 9th.
Canadian Prime Minister Mark Carney has said he expects to meet senior Chinese leaders in the coming months, signaling a reset in ties between Ottawa and Beijing. Carney told reporters that Canada is restarting what he called a broad engagement with China after years of diplomatic strain. He recently discussed trade issues with Chinese Premier Li Qiang, and officials say he could also meet President Xi Jinping during two upcoming Asian summits later this month. Listen in.
Canada determining where can we trust the United States through ups and downs, and in what areas can we do that, and where should we have that exposure. It's a similar process with China. We are restarting broad engagement with China. We have a broader trading relationship with China. There are different levers that we have, or opportunities that we have for China in Canada. And we are in the process of having those discussions on a much broader range of issues than single sectors and single trade.
All right, moving on now to some corporate news. Nestle is set to cut as many as 16,000 jobs worldwide as part of a sweeping restructuring plan to boost sales volumes. The move comes under new CEO Philip Navratil, who said the world's largest packaged foods company needs to become leaner and more efficient. Now, despite the shake-up, Nestlé's latest quarterly results beat expectations, driven by strong pricing-led growth in coffee and confectionery sales. More details are up next.
Nestlé will cut 16,000 jobs in what it argues is an effort to become more efficient. That was the message from new CEO Philip Navratil on Thursday as the firm tries to raise sales volumes. He said 12,000 white-collar jobs would go and 4,000 more will depart through initiatives in manufacturing and supply chain. The Swiss maker of Kit Kat chocolate bars and Nespresso coffee also reported better than expected sales growth Wednesday. It cited pricing-led improvements in coffee and confectionery. Nestlé reported a 1.5% third-quarter rise in real internal growth, which is a measure of sales volumes. That was well above analyst expectations. The world's largest packaged food company has fought to re-energise stalling sales growth. It also wants to stop a sharp share price slide as costs have risen and debt levels climbed amid rising investor pressure. Navratil recently replaced former Nestlé head Laurent Frex. He was fired last month over an undisclosed relationship with a direct report.
Johnson & Johnson is facing the first lawsuits in Britain over allegations that its talc products cause cancer as it fights tens of thousands similar class action claims in the United States. Take a look.
Johnson & Johnson is facing its first lawsuits in the United Kingdom over alleged cancer-causing talc products. That comes as the drug maker fights tens of thousands of similar claims in the United States. Legal firm KP Law said it filed a lawsuit Tuesday at the English High Court on behalf of 3,000 people who say their ovarian cancer or other diseases were caused by using J&J's baby powder between 1965 and 2023. The firm says J&J's talc products contained carcinogenic fibers, including asbestos, which is often linked to mesothelioma, a deadly form of cancer. The value of the lawsuit against J&J and a subsidiary of its former consumer health unit, Kenvue, is estimated at just over $1.3 billion. Kenvue said in a statement that J&J baby powder did not contain asbestos and does not cause cancer. J&J stopped selling talc-based baby powder in the US in 2020, switching to a cornstarch product. It did the same in the UK in 2023. The company has sought to resolve the tens of thousands of similar lawsuits in the US through bankruptcy, but federal courts rejected the strategy 3 times.
TSMC, the world's leading maker of advanced AI chips, has reported a record-breaking 39.1% jump in third-quarter profits, easily beating market expectations. The surge comes on the back of booming global demand for artificial intelligence processors. However, analysts warn that fresh US tariffs could cloud TSMC's outlook, even as the chip giant cements its position at the heart of the AI revolution.
Chip giant TSMC posted a record-breaking third-quarter profit Thursday, up 39.1%, smashing market expectations. But looming U.S. tariffs could cloud its outlook. Riding the AI boom, the company reported a net profit of nearly $15 billion, marking its 6th straight quarter of double-digit growth. Demand for major players like Apple and Nvidia continues to boost its bottom line. The Taiwan firm says AI demand is still strengthening and is higher now than it had expected only 3 months ago. That follows similarly robust outlooks from other major tech players, including South Korea's Samsung and European chip gear leader ASML, a big supplier to TSMC. Despite the strong results, uncertainty looms. U.S. tariffs imposed by Donald Trump's administration weigh on the outlook. Still, TSMC is pushing ahead with a $100 billion U.S. expansion. That's on top of $65 billion already pledged for 3 plants in Arizona, 1 already operational. TSMC shares are up 38% this year, outpacing Taiwan's broader market, as investors so far shrug off the tariff risks.
Kenya has passed a landmark bill to regulate digital assets, bringing crypto trading under government oversight. And in the US, Bitcoin pioneer Roger Ver, better known as Bitcoin Jesus, will pay $50 million to settle tax evasion charges. Here's a look at the week's biggest crypto headlines.
From Kenya moving digital to the so-called Bitcoin Jesus, This is Crypto Weekly. Kenyan lawmakers have passed a bill to regulate digital assets like cryptocurrencies. They want to boost investment in the sector by putting clear rules in place for the emerging industry. A senior policymaker said the move puts the East African nation close to joining others, including South Africa, who are the only African nations with laws to govern the digital assets industry. International Monetary Fund Managing Director Kristalina Georgieva is telling member countries to accept the rapid developments of digital currencies. She said the digitization of fiat money was very good and very powerful, but differentiated this from unbacked cryptocurrencies such as Bitcoin, which the IMF has long advised central banks to avoid as a reserve asset. While the IMF might be saying get ready, the G20 risk watchdog is saying be careful. It says there are significant gaps in countries' attempts to regulate fast-growing crypto markets. The watchdog says it could potentially harm financial stability. Bitcoin and Ether tumbled as US-China tension ramped up, wiping out a recent rally. It came as the US and China began charging additional port fees on ocean shipping firms that move everything from holiday toys to crude oil. Bitcoin fell to around $110,000 just over a week after it hit a record high above $126,000. An early investor in Bitcoin, dubbed the Bitcoin Jesus, has agreed to pay nearly $50 million to resolve US charges that he evaded paying tens of millions of dollars in taxes. Roger Ver entered into a deferred prosecution agreement resolving mail fraud and tax evasion charges.
Alphabet's Waymo showcased its self-driving Jaguar I-Pace taxi at Bronx Community College in New York, highlighting a partnership to develop autonomous vehicle training programs for students. Now, this aligns with New York City's push towards autonomous transport, with Waymo operating robotaxi pilot programs. Additionally, Waymo announced a partnership with meal delivery firm DoorDash to begin autonomous grocery and meal deliveries in the Phoenix, Arizona metro areas in upcoming months, expanding its autonomous service network beyond mere ride-hailing. And a quick look at the Indian stock markets before we slip into a break. And the action on the stock markets is flat, but a little bit of negativity coming by way of the IT pack. And the IT pack has really disappointed sentiment on the stock market this morning. Look at the charts coming up on your screen. Sensex and Nifty a little bit in the green this morning, down about 0.1% or so in trade this morning. Nifty well below the 25,600 levels that it had neared yesterday. Sensex also unable to hold on to the 83,500 odd levels. Remember, yesterday Sensex saw a rally of as much as almost 900 points and decline on those levels coming in this morning. What's causing the hurt on the Dalal Street this morning are the IT stocks. And this, of course, is driven by Wipro. Wipro stocks are down more than 4% in early trade this morning. In fact, the stock heading towards its lower circuit, and that is what the issue seems to be with the Indian markets right now. So Wipro is down after registering negative year-on-year growth, a decline in year-on-year profits and revenue. Wipro is down about 4%. And Infosys, despite a sequential and a year-on-year growth, marginal muted growth, is also in the red. IT stocks pretty much spoiling the market rally that we saw yesterday. Time for a very short break. Coming up on the other side, a special on Dhanteras. Should you be buying gold or should you say bye-bye to gold? We'll have a panel of experts right here on News9 to tell you what exactly to do with your money and whether gold should be on your buy list or not. You're watching Morning Brief at 9.
एसोसिएट स्पॉन्सर बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
थोड़ा आराम कर ले।
पर कहाँ रुकेंगे?
मैं बताऊं? इंडियन ऑयल स्वागत पेट्रोल पंप। स्वागत है हैप्पी जर्नी की रेसिपी।
You can take a left, you can take a right, and it's salsa or a little time. If you really feel it, say it price. It's the vibe, it's the vibe, it's the vibe.
What is To the Nines?
In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the Nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the Nines, for the leaders of today and the visionaries of tomorrow.
You're watching this very special on Dhanteras that we are bringing to you right here from our studios in Noida with a panel of experts. And the big question is, should you be buying gold this Dhanteras or should you be saying bye-bye to gold? Well, as we told you, it's that time of the year again where it's not just lights and sweets and diyas that are flying off the shelves, it's also gold coins. But with gold prices at record highs, and how? Should you be buying gold this Dhanteras? Because gold prices are above the 1,30,000 rupees per 10 grams. So is this time to go stock up on that gold, or is it time to take some out from your stash and maybe sell it and make some money in return? That's what our experts on the show here are to tell you all about. They'll tell you how should you be a smart buyer or a smart investor this Dhanteras. Well, joining me, we have a very special panel of experts from around the world. In fact, starting from Dubai, we've got Andrew Naylor, the CANS and Head of Middle East and Public Policy at the World Gold Council. From Mumbai, we also have Kunal Shah, Head of Commodities Research, Nirmal Bang joining me. And I believe from Delhi joining me is Rahul Gupta, the Chairman and Managing Director of PP Jewellers. Good morning, gentlemen. Thank you so much for your time. And of course, this is that auspicious time to stack up on your gold purchases, to really have that auspicious gold buying going. But at 1,30,000 rupees per 10 grams, that's about $4,379 an ounce. Let's first get the global view from you, Andrew Naylor. Now, some experts are saying that this is the best weekly rally we've seen since 2008. And that was the year of the subprime crisis. So, Andrew Naylor, for beginners, first tell us, we'll come to whether you should buy or not buy gold later, but first tell us, what is this gold rush all about?
The big story about the gold rush is investment demand. Investment demand across the board is up. It was up by about 78, 80% last year. This year we've seen 50 all-time highs in the price, and there's a number of factors driving this. Lots of different factors, but interest rate outlook, particularly in the US, has had an impact on global demand for gold. US dollar and concerns about the decline in value of the US dollar and perhaps de-dollarization policy more broadly. That's a big driver. And then broader economic and geopolitical uncertainty. We've had dislocations in trade, tariffs are going up, they're likely to be inflationary. Gold is seen as a hedge against inflation. I think the big story, though, is risk and mitigating risk. And a lot of investors worldwide, they turn to gold to diversify their portfolio and to mitigate against both economic and geopolitical risk. So that's the theme that I think underpins gold's rally so far this year.
Right, so, of course, a lot of factors there driving up gold prices. As Andrew Naylor is telling us, the uncertainty that's looming in the world, the hedge against the US currency, or even stocks which continue to be volatile at the moment. But Kunal Shah, to our understanding, there's one more factor which is really driving up gold prices, and it's not just the festive demand from India, but also central banks which have been lapping up gold. So now, for retail investors or jewelry buyers, both of them, watching you speak today, should they be taking a cue from what central banks are doing? Or do you think if they do that, they would be walking into a late cycle rally?
I think this year's rally is more investment demand driven rally rather than a central bank driven rally. Previous 3 years, it was major ETFs were selling, no investment demand, less investment demand. And this year has been exceptional year. Gold ETF buying all the investors are lapping up gold because the level of uncertainty in the system is pretty high. No one knows how US is going to service their debt going forward, how they are going to roll over their debt, how the debt crisis of the developed world is going to get managed. So there are so much uncertainties. So I think the rate cut cycle has already begun in a time when the inflation is already high. So considering all of these, what is going to happen is something, it's like nobody knows. And because nobody knows what's going to happen in future, people are just buying gold left, right, center. So if something goes bad from here, at least they have gold. So that is how gold and all the risk assets are rallying together. But gold is outperforming all risk assets and really shooting up quite sharply. So that has been a story of gold this year so far.
So people are buying gold left, right and center is a word coming from Kunal Shah. Rahul Gupta, you're a jeweler, you are in the retail category and you're interacting perhaps with customers. So tell us, this time around, it's first Dhanteras and then there is Diwali and that leads to the wedding season. Do you see customers reacting a little negatively to this obnoxiously high gold prices, or do you see there is some sort of a visible difference between, let's say, last year and this year? Because gold prices have never been this high historically. Are customers buying gold left, right and center, or are customers coming to your store maybe with a little bit of gold that they are exchanging and getting something different made from it and maybe converting one set into two?
Till yesterday morning, the customer demand was very strong. The EFP in India was almost 5,000 rupees per 10 grams. So customer demand was huge, and only after yesterday, after the price crossed 130, then the physical demand has taken a dip. The EFP in the gold has reduced from 5,000 to 3,000 rupees per 10 grams. So it's seeming that the festive demand is over. And now it's all central banks all around, due to which the prices are absolutely inelastic. They are moving up with the trend. And I believe it's all central bank, which is the issue primarily in the gold price movement right now. Because Indian demand, yes, is a huge demand. But at the same time, the quantum with which the central banks are increasing their reserves is humongous. China has increased from 2,000 tons to 2,300 tons. If 100 ton a central bank keeps adding, if a sovereign keeps adding, then the price is a huge substitution. I mean, the forex reserves, us as a country, we've got 600, 700 billion forex reserves. China has got 3.5 trillion. Hong Kong has got another $500 billion. So if the countries and sovereigns, they substitute dollar as the base currency, as the international currency, and they switch to gold, then price, I believe, will remain inelastic. And the Indian market, I believe, another week, 10 days, till the time people are busy celebrating Diwali. Post that, I believe, we'll again see huge physical demand, EFPs moving up, and the prices, even the demand from the Indian consumer, the local consumer, who's buying bullion as a saving option and is substituting it with other investment options, I believe even that is going to be inelastic. India is estimated to be having 25,000 tons with the common people, which is a huge number. I mean, it's almost higher than all central banks together, as a matter of fact.
That's right. In fact, if my memory serves me right, I remember reading that while our forex reserves are about $700 billion or so, the total household savings in gold, the gold that citizens in India hold, is almost as much as the entire size of India's GDP. That's more than $3 trillion is what the numbers had suggested. But stay with us, Andrew Naylor, I want to come back to you. Now, what are the estimates? What is the forecasting that you are doing at the World Gold Council? Where is gold headed from here? Because our other experts here seem to believe that there is going to be no ebbing out and this demand and the central bank buying is only going to continue. So as per the estimates of the World Gold Council, where is the price of gold headed from here?
Well, we don't forecast the gold price, but what we do look at is the fundamental drivers of gold's performance and the outlook for those. And we do feel that certainly in the short term, there could be a bit of a technical correction. There's a lot of technical activity in the trading side of the market going on at the moment. There might be a little bit of a correction there, but in the medium to longer term, the fundamentals are all there. We're in a situation of unprecedented economic geopolitical uncertainty. There are concerns about global debt levels, particularly in the Western markets, and the ability to service those debt levels. There's a broader trend of de-dollarization and moving to a multi-currency world that'll be in the longer term. So all of these factors we think are going to play into quite a supportive environment for gold. And we view gold as a long-term strategic asset. It's something that can protect your wealth. It's liquid, so you can easily sell it if you want to and access emergency liquidity. But it performs differently to other asset classes. And I know Kunal was saying there's stronger correlations at the moment with a lot of risk-on assets, but in the longer term, gold doesn't have strong correlations with other asset classes. And that's key, because if you want a well-balanced portfolio that can mitigate risk, you want something that performs differently to everything else. So when the equity markets aren't performing very well, you've got something that can take up some of the slack and protect your wealth. And that really is key to understanding gold's role as an investment, as a financial asset. When it comes to jewelry demand, what we have seen is although tonnage has come down in terms of the amount or the weight of gold being bought, the value of gold being bought in the jewelry markets has actually grown. And it's grown because, again, jewelry has this dual function as both an adornment, as a cultural asset. It's aesthetically pleasing, but it's also, if it's fine gold, it's also an investment and can be considered a financial asset as well.
That's right. But again, one doesn't really know. You said there's no correlation. Some say there is a negative correlation between equity and gold. So every time we see that there's a massive correction in the stock markets, you see gold prices rise. But I'm not sure historically we've ever seen gold prices correct dramatically, because we've seen stock market crashes. I'm not sure we've seen gold price crashes per se. But Kunal Shah, Dhanteras advice for all the viewers who are watching us right now: buy gold or do not buy gold. Say bye-bye to buying gold and maybe just use all the gold that you have in your lockers, reuse it, put it to better use, or maybe sell it.
I believe that this is not the time. I mean, you can continue to hold whatever you are holding right now, but this is not the time for initiating a fresh buy. After the kind of spike we've seen, $500 spike in a matter of last 4 weeks, 5 weeks. So generally $500 is a kind of rally which we used to see in 1.5 year, 2 years period of time. But now, due to the worsening geopolitical, fiscal, debt problems, all of these problems combining together, I'm not able to recommend to go long at these levels aggressively, because the fact is that you've run up too fast, okay? And without any reason, even if we witness any profit taking, I will not be surprised. So I'll recommend to wait, and whenever there is a healthy profit taking coming in the market, that is the time you again indulge in buying, because the rally which is taking place right now, it is, I mean, if you look at what is happening every day after the Indian market closes, and you see at night, every night it opens up by $50 gap up opening, $60 gap up opening.
Yeah.
So this doesn't make sense to me right now. So I will not recommend. I will tell investors to. I know Dhanteras is an auspicious day to buy gold, and Diwali is a good time.
Yeah.
But you can postpone your purchase for Diwali, and maybe perhaps after Diwali, if it goes down, then you can buy it. But not at this level. You should wait.
Right. So I think the conflict between taking a financially prudent and economically driven call or a traditionally dominated sort of cultural call is what investors and retail buyers would be grappling with. But Rahul Gupta, are you happy with Kunal Shah's advice? Because that doesn't bode well for your business now, does it?
Well, it doesn't go well with my business, but at the same time, I feel that even for the factors which are therein, for example, we are seeing 27th October approaching, when the Fed is to decide about the interest rate cut. So I believe there is talks everywhere around. There will be 25 basis cut, 50 basis cut, somewhat in that range. So seeing that, I believe prices may not rush up as what the speed which it was going on, but still I believe it will be increment in prices. I don't see any buying cuts in Dhanteras as such on ground. I'm still seeing people bullish all around. Since yesterday EFP was down, that was primarily because people had bought their festive demand, and they'll be probably buying, everyone will be buying on Dhanteras. And there is no factors internationally which are showing that the gold rally is to stop. The reason is, primarily what Henry pointed out, that the sovereign debts have become huge. All across, it's around $300 trillion debts, which are there across with all central banks. And wherein Fed has got 37 trillion all alone. The payouts is huge. So keeping all this in mind, I believe the corrections in the last 10 days, I have observed something I'll share with you.
Sure.
So what best corrections have been seen is $100 correction. And they last max for half an hour, 45 minutes or an hour. Today morning, there was a correction. The prices gapped up from 40 to 80 to 43.80.
Yeah.
Another half an hour, there was a buyer in the market to take it back to 43.80. So there is a strong buying all across. And currency substitution, if it is seen, then gold is a hedge. Gold may come back a little. There may be a correction, but it's a perfect hedge for inflation and for the present position. This is what I feel.
All right. So stay with me because I will want to then come back to you and seek your advice to all the retail shoppers, Dhanteras, Diwali, wedding season shoppers on what is the best way to buy gold. But we'll just come back to that. First up, Andrew Naylor, I want to come back to you now on something else which is shining pretty much as vibrantly as gold is and as bright as gold is, and that happens to be silver. Now, the fact that the demand of silver is linked to industrial use, can one assume a little more realistically that the silver rally is going to be longer than the gold rally and definitely a more sustained one, because that is going to have real industrial usage demand which is only going to grow, as opposed to gold, which may not become a hedge once the scenario becomes a little more certain than what the world is in a flux in right now?
Look, they're fundamentally different asset classes. So as you said, silver, it's more of an industrial asset. There is some jewelry demand. There is a little bit of investment demand, but it's primarily an industrial asset. And that's fine, but it's more of a commodity. Gold is unique. There's no other asset class like gold that has this unique demand profile. 20% of annual demand is central banks. 40% is investment. About 33% is jewelry. 7% is tech. This is key to understanding gold because there isn't an asset class that has that diversity of demand, and those different demand areas or sectors react differently in the same economic situation. So jewelry and tech demand tends to be more pro-cyclical. When the economy is doing well, people buy more jewelry, they buy more tech that might use gold as an input. When there's a lot of uncertainty on the horizon, that's when investment and central bank demand picks up. What that means is gold just performs differently. As I said before, it's not strongly positively correlated, particularly in downturns, which makes it an important diversifier. Silver doesn't have that profile. So there's a role for silver, but it's a different and perhaps complementary role to gold.
Right. But again, the fundamental question, do you think the silver rally is going to be a sustained rally, or do you think silver is also going to plateau at some point when let's say there is more stability in the world?
Well, I don't think that the silver rally is driven by instability. It's more driven by other fundamental factors like industrial demand, things like that. So it's a question of when that industrial demand will pick off. There is some technical and investment demand at the moment with speculatory motivations, but in the longer term, it's really about industrial output.
All right, understood. Kunal Shah, now coming back to gold, what's the best way for investors? You're saying there's not the right time for people to enter the gold market. It's too hot and it could pretty much, burn your investments. But for those who are not going to listen to your advice and they will say, no, it is Dhanteras, I need to go and buy gold. What is the best way that they should buy gold? Should they go for ETFs? Should they go for digital gold on all these apps? Or do you think just buy some physical gold, maybe in the form of coins or little small, bars, whatever you can afford, and keep it at home?
I think the better way is ETFs. ETFs are quite transparent. So we've seen disparity in silver and ETFs trading at premium, and now that premium is eroded. So the rationality is always there in the ETF market, in the spot market also, after a point. So this fluctuation generally doesn't take place. It's like a 10-year, one time in a 10-year period. But I believe ETFs are the much better way to invest in gold.
ETF is a better way to invest gold, okay. And Rahul Gupta, for those who are still going to be ardent buyers who want to walk into a retail store and want to touch and feel their gold and sort of, get you to measure it right in front of them on the purity, What are some of the suggestions that you think Dhanteras buyers should know? What are the inputs that you want to share with them on how to ensure that they don't get fleeced and they don't get overcharged and they know that the purity, the authenticity of the gold that they are buying is something that they can vouch for? What are some of the measures that retail buyers buying gold should be completely wary of when they go and purchase gold, especially at such high levels where the risk of being defrauded is also as high?
Well, the prices being that high, the risk of getting defrauded is really very high. You're absolutely right. So it's important that if you're buying jewelry, you must buy hallmarked items. If you're buying coins, you should prefer hallmark or either through the certified refineries. And the gold must be bought in present situation only by electronic payment methods and through invoices properly, because the risk of getting spurious or lower purity goods and a higher invoiced, higher valued goods is very high. So to keep that risk low, it's important to be in the proper formal channel and buying hallmark jewelry, buying hallmark coins, good refinery bars. And at the same time, most important is that in India, every market, there is an association which comes out with a price every day. So must follow those prices so that you are not overcharged and duped into the prices. Because price fluctuation is high. For a common consumer to know the real price of the gold at that time is absolutely impossible. So the right way is to find out any benchmark price. Maybe MCX is a future exchange, but still you get an idea about the pricing range.
Right.
That what is the price ranging about. With this kind of fluctuation, the people keep margin of 10%, 5% just for the fluctuation. And to cover them up, use a benchmark for the pricing. That's what I recommend.
All right. I want to talk on those benchmarks for just a minute more. And Kunal Shah, maybe you can come in here. Does it make sense actually for India to have such a wide-ranging variety of gold prices? Because there's a separate Delhi price, there's a separate Mumbai price, there's a separate Sarafa Bazaar price, there's a separate price on MCX, there's a separate spot price, there's a separate future price. I mean, spot and future, of course, need to be separate. But overall, do you think there is some need for the government to actually have a standardized gold pricing finally come into play?
See, I think RBI is following IBJA rates, okay, Indian Bullion Jeweller Association rates. These are the rates which RBI follows. So I believe that for benchmarking, that rate will come to. But the pricing between different cities and all that disparity is likely to stay because of the transportation cost, physical availability of the metal. So it is very difficult to have a uniform one price only across the country, but that benchmark in India is the IBJA prices.
Okay.
So yes, I think government is working towards it, and they'll be coming out with some of the other way that they can still smoothen out that disparity which is there in the markets.
All right, and final word to you, Andrew Naylor. Now, there are a lot of options available to investors today, and those who are potentially looking at gold. Some would argue that there are other asset classes as well that one should consider. Now, cryptocurrencies, of course, are not formally accepted in India, but there are markets that you sit in where there would be some sort of a trade-off between, let's say, those who want to invest in gold versus those who want to invest in crypto. And we've seen a rally across both these, I don't know if I can call them commodities or not, but both these asset classes, we've seen a sort of similar rally. A lot more fluctuation in crypto, a lot more stability in the rising prices of gold. But let's say in markets outside of India, how do you think the crypto versus gold trade-off is playing out?
Yeah, it's a very interesting question. It's something we get asked all the time. We get asked, is crypto the new gold? Is crypto the new safe haven asset? We would argue no, it's not. There's a role for crypto. It's playing a role in portfolios just like the equities do, fixed income, property does. But gold, as it goes back to my earlier point about the demand structure for gold, central banks, jewelry, investment, and tech, to simplify it.
Right.
That unique demand profile just means gold is different. And the cryptocurrencies, they're more strongly correlated to risk-on assets, to the equity markets, for example. So if you are investing in crypto, you might want to think about mitigating some of that risk with an allocation to gold. So you could argue, actually, that they're complementary.
They're complementary, but they're definitely not replaceable. Let's leave it at that. This Dhanteras, this festive season, and of course this beginning of the wedding season in India. Remember, gold prices at record high. I'll thank my guest, Andrew Naylor. Thank you so much for joining us all the way from Dubai. Kunal Shah, Rahul Gupta, as always, pleasure having you here with us. And with that, it's a wrap right here on this edition of a very special program on Dhanteras. Now, the question really that you all need to answer for yourselves is, will you be buying gold, or do you perhaps need to listen to something that some of the experts on the show were saying and maybe hold off your purchases for later? I'm sure even if you don't write to us, the data will tell us what you eventually did. Thank you so much for watching.
You can take a left, you can take a right. Enemies salsa or a little time. If you really feel it, say it on price. It's the vibe, it's the vibe, it's the vibe now.
थोड़ा आराम कर ले।
पर कहाँ रुकेंगे?
मैं बताऊं? इंडियन ऑयल स्वागत पेट्रोल पंप। स्वागत है हैप्पी जर्नी की रेसिपी।
Times change, but der Klassiker remains. Where legends rise, this is football as it's meant to be.
Light, camera, and action. Kick back, relax, grab your favorite snack because News9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News9's pick of the week, don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News9's Page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.